Hey there, and welcome to another training tutorial. And in this video, I am going to show you an example and explain to you why following the so-called smart money is never typically the best approach when trying to follow unusual option activity. Right now we are in September. It's the 26th and it's 2012. So for those that are looking to kind of backtrack and potentially look at this in the future, you know the dates and you could see the dates that we start here when we look back going into the 24th. So on this SVN, 7 days group is the name that we want to focus in on. So I'm going to roll this down a little bit. And the reason why we are focusing on this one is because I picked up on the 24th unusual option buying in the October 1250s. So just briefly, I'll explain to you why this is very odd and why it caught my attention. So the option activity in this was, at the time, I believe 60 times the typical volume traded. And when we look here, the closing price on shares were at $9.79 and they were up a little bit. Volume was 222,000 shares for the day. Opened at 933, hit a high of 997 and a low of 932. Well, if we look here, the option volume or the open interest here is zeros. And we look in November, very thin as well. We even look out in February. This one does not trade very often. And it's a Chinese name. It's an ADR. You can see here. And when you see option activity like this, and in recent years, the last few years, there's a few research companies that are kind of shady, and what they will typically do is they will position themselves ahead of some research that they publish. So a lot of the times I've noticed is that it was before was a strong put activity, and what would happen is I would pick up the strong put activity, and then a few hours later or a few minutes later and sometimes a few days later, some news would come out and it would plummet the stock in these Chinese companies. This is something that they were targeting. So being that this is a Chinese company, being that the option activity is very unique, and noticing that the spreads here are very wide and buyers were coming in earlier in the morning at 65 cents was very interesting with implied volatility moving higher. With that, noticing on the chart here, on the 24th, volume ticked up a little bit here. And then as we go into the 25th, you could see as well is that the volume moved up higher as well. So if we just come back here and we look at the chart, the daily chart, you could see here a little bit easier exactly what I'm talking about. The volume starting to perk up here. You know, the name has been in a downtrend and it's starting to flatten up here. So being that I don't really like to play for the whole takeover aspect, I like to apply some kind of analysis to it, technical analysis. This is what I was looking at. I was looking, okay, it's kind of based out. It's been holding here. It has a high short interest and I believe 7 days to cover when we looked at it. So this could get going if it starts to break out and it gets above 10, which is a key level. And it's exactly what happened. Well, today's move, being that today's the 26th, was a move into 11.95 and near the highs. Now, I'll walk you through exactly what occurred here. Being when we look at this volume here, that the October 10s and the October 1250s are very active here. So let's just break this down and say, okay, if they are, and this looks like to me insider activity, if they are positioning themselves, what's the blueprint here? What could be the outcome, or what's this activity trying to tell me? Well, being that they pay 60 cents for options, or 60 to 65 cents for options, and being that this is this 1250 strike, they actually need prices to be above $13.10 at October expiration. Well, we look at here, prices are about $10. That's about 30% market cap, or a 30% takeover if that were to occur, and potentially more if, let's say, a 50% bid were to come and the prices could be higher. These are the things that you want to break down. These are the things that you want to think about of how your trade was going to become profitable if there's no takeover to come. So if this were to squeeze higher, implied volatility would still continue to be high here, and we could see and I continue to see these options move higher. And if I had to sell them at $1.20, not a bad trade. With the wild card, I always refer to the takeover as my wild card play in the back of the hand as well. But again, using options and understanding the time frame that they're giving us, we want to know what is the trade that can give us the best probability of success. Looking at this, my typical analysis would be play the 10 1250 call spread, because if they're targeting the 1250s, we need it to move at least another $2.50 higher before we can actually make any profit, potentially even a profit. And actually in expiration, we need it to go to $13.10. So a lot of the times, following this volume right here is not the best case scenario. And the reason why is because we have to think to ourselves, well, there's somewhat of a blueprint here, and there could be something going on, but what is going to make us the best trade to make the most opportunity to make profit? And when we look at it, $2.50 move in a $10 stock, that's a very large increase. And this is where a lot of amateur traders or traders that are not familiar with being successful in trading make a lot of the mistakes, is because they look at this and they go, alrighty, I'm going to jump behind it. But they're not thinking to themselves, okay, what about the trade that's going to make the most opportunity for me to be successful? Being that there's only 25 days for this to work out. And that's what they're telling us, because when we look here in some further months, we do see some action in the 1250s in November, which is something I like to see. But when we look further out, again, we see some more 1250s. And this is where I talk about the activity being interesting, because you could see the 1250s being scattered around and buyers coming in. This bet right here is about a $54,000 bet, and we could break it down. So, I would say roughly about $65,000 that somebody put on the line here looking for a push higher. And when we break it down and you ask yourself, and I ask myself, I go, okay, this is the reason why I follow unusual option activity, is because why would someone want to lose $65,000 unless they felt very, very confident in that prices are going to go higher? Because calls are only going to make money if prices actually go higher. So taking all that in, understanding what is presented to us, we want to find the best trade. Well, being that the options are very, very thinly traded, this is very interesting footprints that are left here, because there's no volume or open interest to compare it to, and the volume that this came in on the 24th is, at that time, I believe 60 times the normal call volume traded. And being that the calls are being bought on the offer on wide spreads, we can see exactly what is going on and kind of put the pieces of the puzzle together. Typically, what I always suggest is not going for that same strike, and it's actually going down one more strike, coming closer to the money. One of the ways I typically suggest is actually buying the 10s. So in this instance, you buy the 10s and you sell the 1250s. The other thing you can look to do as well is, let's say, and this is the odd thing when insiders act on information, they go right for the calls if they think something's going to happen. And in all actuality, and this was my second thought, and actually my first thought of wanting to do, was to put on and sell these puts here. You can see they're 1280 by 390. Yeah, they're pretty wide, but no volume, no open interest. And if there was something to come out, you have, let's say, a fill price of about $3. So if anything was about, let's say if a takeover occurred at $13, that level that we're looking for, well, we would profit $3 per se, $3, $3.25. And this is a great learning experience and something to always remember, because we would have profited $3. And yes, these options could have moved, let's say, to $1.50, $2. But the 1250s, the puts here, we stand to make a little bit more money. And it's interesting because when insiders act, they don't look at the put side of it, things. They can actually sell the puts, the in the money puts, which would be less of a red flag. Because what would happen here is that the market maker would actually offset this, so they would sell it at what they sold it at, and then they would go in and reduce their risk by, when they short shares or would go long or short options, the short shares, so they would go long the stock, and then actually they would make money and you would make money as well. If this were to happen here and prices did go higher, the market maker would file a report with the SEC and FINRA and have this investigated right away. They wouldn't really look too much. I mean, they would, if a contract like this and a block traded like that or contracts filled in, they would look at it a little bit more, but it's a little bit less obvious, which is kind of what you want to make it if you're acting on inside information. My thought was actually to look here, but I actually got a little bit excited because when we come into on the 24th or 25th, you can see that 960 contracts were created here. We have some more buyers, which some of them were me, and I was able to get some at 55 cents here. You know, I was looking at this and I'm like, oh wow, I can get a little bit cheaper than the buyers that came in here. And when we look here, prices are at 78 cents. So we have some strength, we have volume behind it as well, and we get a push higher. Then we look at some more volume here. You don't really see too much, and this is what you will typically see. You can see here on the 750s that some of these contracts traded here, which is interesting. You can see here on the 750s as well. Now what they should have done is come closer here, but when you notice the market is just so wide that you really can't get any kind of trade off in here to really, you know, make it beneficial or to really find a price here because they're so wide. So this is the reason why I went with the calls. Well, when we come into today, prices shot up higher. They closed at $12 today. We take a look here at the chart and we take a look here. We had a little bit of a dip here, and then all of a sudden volume started to tick up with a move here. And what happened was that there was a press release about an offer, a tender offer to take the company private at $12.70. So here we hit a high of $12.19 and then we backed off. Well, that's a problem because those individuals bought their options at 65 cents, which a break even is at $13.10. Being that $13.10 that we need to get above to make profit. Well, the offer sits at $12.70 supposedly right now. $12.70. Well, what does that leave us? That leaves us in the hole here, 40 cents. And you could see here, these options have traded 15 by 40. That negative 40 cents is a loss. And if there is not a bid that comes in higher or a takeover offer, or the board doesn't accept that offer, or if they do accept that offer, that's a negative 40 cents here. Those options are only in the money 20 cents. That's a very large loss that they took by trying to act on that inside information. Instead of going to these 10 strikes and leveraging it in there, if we go back a few days here, you can see that these options were, you know, potentially can get a $1.50 yesterday or $1.25 the day before. And as we come into this day, you know, they can close it out at $2. Well, you know, 75 cents is better than a 40-cent loss. That is the whole reason following the insiders or following the option activity doesn't necessarily mean that it is a 100% success rate or that they actually know what they're doing, because these individuals that got in here could and likely had this inside information, but potentially thought this offer was going to be much higher, got a little excited, got the wrong information, didn't understand options. You know, there's a lot of different things that could have occurred here, but you know, this is a perfect example of why looking at prices, following the option activity, using all that, and actually just breaking it down and saying what is the best trade for me to make money is going to make you more of a successful trader. Because if you blindly followed these option buyers and, you know, I followed them and I got them at 55 cents, I'm sitting at a loss now. And I'm saying, man, I wish the things that I just explained to you, I actually went with the 12.50 spread or sold the puts. I would be actually having somewhat of a profit and saying, wow, this is another opportunity that I presented to myself, that we followed unusual option activity. We followed the insiders, we tracked them, we caught them, and we were able to profit. The other thing too we could have looked at to have done is actually just traded the stock. Being that stock was under $10, a lot of times I always suggest with volume that thin to look to just buy the stock. Now, the account that I had purchased this in is an account that it's a very small account that I'm trying to trade with, and I put the contracts in this account because I wanted to increase the value, and I'm documenting the trades to teach people how to take a very small account and, what trades and what to look for to be able to grow that account. That was the reason why I went and bought those calls and a small amount of them in that account. So looking at this, we break it down. This is the reason why we follow unusual option activity, but this is the reason as well that I don't follow exactly what insiders or what I think insiders are doing, because they could be wrong. And if they are wrong, they are losing a lot more money, but I do have money at risk as well because I'm following them. That's why I want to have the trade to benefit me, is in many scenarios to have a success rate in it than just following them and having some kind of a loss like that. So the interesting thing on this one as well is when we take a look here and we take a look at these options, take a look here at the 1 minute. So we looked at where prices spiked up here, and at the highs here, implied volatility was ticking higher, which you're not going to see here, but these hit at 90 cents. Remember, I purchased mine yesterday at 50 or 55 cents. These were looking really good, and when I saw the 90-cent print here and I was seeing that they were higher, I was very intrigued. But my play was to play for some kind of takeover, and with this creeping of this move higher, this was very intriguing. What was interesting here is that you could see the volume of 99 contracts traded at 90 cents, and this trade took place right at about 9:37. So if we go back here and we look at SVN, look at 9:37, somebody was trying to act on this move here, and they paid a hefty price for it, only to not get the deal price supposedly. I never know, and we'll never know exactly why that trader purchased it or got in, but they picked up quite a bit of shares options, and they paid a lot of money for them, or a decent amount of money for them. The interesting thing on this one, though, is that prices, again, I told you the deal is at $12.70, but prices closed at $12.19. I'm interested to see what develops out of this because it is an ADR. It is a Chinese name, and a lot of sketchy things do occur. One of the things that caught my interest is that a lot of the volume today, we'll have to see the open interest, but some were selling here, but we weren't seeing a lot of selling here where a lot of people trying to close out. So I'm not sure, again, if this is this dumb money staying in here and not really realizing that, okay, all bets are off, or if there's actually something that could come down the pipe. But for the video lesson, this is exactly what I wanted to teach, what I want to show, and have you understand that you want to make sure that you put on the best trade for yourself and what your trading plan has to make profit. Option activity is only an indicator, just like what we saw. It was a good indication of future price movement, but playing a specific option wasn't the best outcome. We want to make sure that we understand how to use options, the best way to use options, and sometimes using the stock or coming closer to in the money is going to benefit us a lot more. So if you have a question concerning this video, feel free to email me or submit a support ticket, and I will be able to answer that. Until our next training, thank you for watching. After you subscribe to the channel below, make sure you head over to optionsizzle.com and download my free report on how I outline the process of finding options that are on the verge for explosive moves.